What is going on, YouTube, and welcome to another episode of ClearCryptos Education. My name is T. Hobbs from the Crypto Shop, and of course, you know I brought my man Jay Seals with me. What's going on, brother?
What's up? What's up?
What's up? What's up? Today's edition of ClearCryptos Education is going to be on candle formations and why they're important. Now, many people trade stocks or crypto. A lot of people don't really understand how to read a chart. That's where we come in. Technical analysis is pretty much our wheelhouse. If you guys have ever joined us on the Crypto Shop, these are some we've basically taken a lot of the things that we teach in the Crypto Shop and kind of condensed them down into educational form for ClearCryptos. One of the things that we teach in the Crypto Shop is about candle formations. We've already covered a few other videos that you can check out on ClearCryptos on ClearCryptos video selection. And we encourage you to check those out before making it, or maybe start with this video and work your way through the other videos. That being said, let's get into some candle formations. First and foremost, it's the candle, the green candle and the red candle. Guys, this is the simplest form that I can break this thing down to you. So that's why we chose some of these Google images to illustrate exactly what we're trying to illustrate to you. Now, the green candle. This guy right here, this everybody knows is the bullish candle. This is what everybody loves to chase. When you're in the FOMO situation, you got to chase those green candles. Don't do that, bad idea. But anyway, that's another video. But things you need to know about the green candle is this particular candle is broken down into sections, right? This big section right here is going to be called the body. That's where the majority of the trading happens right here. Now, when you come out of the body and you go to the upside, the high point, this is the highest that the stock or the asset, we'll just call it the asset, stock or crypto. This is at the highest price that the asset reached in this candle time frame. Now, these candles can be 1 minute, 30 seconds if you're brave, right? 1 minute, 5 minute, 15 minute, day charts, hour chart, doesn't matter. The time frame that you're in will dictate exactly what happened during that time period. That will be this illustration of the candle. The high point here is exactly how high the asset reached during that period. The top of a green candle, this little edge right here, is where the candle closed during that time period. So if it's the day chart, at the end of the day, it closed at this period on a green candle. The opposite is true on the bottom of a green candle. The bottom edge of a green candle lets you know where the asset opened as far as price wise on that time frame. Very important that you remember in that time frame. This little needle down here, the point of that needle is called the low point. That's as low as the asset got during that time frame. Now, it's literally the complete opposite when you look over here for red candles. Remember, open closes at the top, red opens at the top. So basically, again, the majority of the trading happens here in the body. However, the high point is here, just like it is on a green candle. But the biggest thing to remember between a red and a green candle is that red candles open at the top and they close at the bottom. Green candles open at the top or close at the top and open at the bottom. That's the biggest difference between the two candle formations. I hope that was informational for you. This video will be quick, easy, and painless. I promise. Maybe not, because Justin's up next.
So now that you know the basics of candlesticks, you need to understand that candlesticks, they tell us a story in whatever market that you're trading. The story of the buyers and the story of the sellers. And together, that story makes up our chart. So we have two different stories that we could read. We could either read a bullish candle, which is our green candle, and then our bearish story, which is our red candles. So we're going to start with the bullish candles because everybody likes green. Green is our favorite color. Here at ClearCryptos, green is clearly our favorite color. So we're going to start with green. So the first candle is the most bullish candle that we can have, and that is a full-bodied candle of buying green, buying pressure. So in our most bullish candle, it's straight up green. There was zero selling, just straight up buying. And you see that because there are no wicks. It opened and it closed at the it opened at the lowest price and it closed at the highest price. Okay. Our next candle is our second most bullish candle here. We like to call that a hammer candle. And the reason why it's bullish is because price came down to a very low point, right? So we opened up high and we came down, and buyers didn't like where sellers took the price. So they bought the price back up to the top and we closed green on the day. Okay. So that's why you see that long lower wick. So buyers won the battle between buying and selling. Okay. So then our next is our normal bullish candle, which you just saw in the last topic that T Hobbs went over. We've got our open, we've got our close at high and low, and we have our wicks down below. So the bulls won, but we had a little bit of selling at the bottom, and we had a little bit of selling at the top to bring us a little bit lower. Our next candle is our neutral bullish candle. So this is what we call a doji candle, and it's a more indecisive candle, right? So we had sellers come down and sell off. Buyers picked us back all the way up, but then sellers came back into the market and brought us back down. So it's not as bullish because we closed more even. However, it was still a little bit green. And then our last candle is our reverse hammer candle to the downside, right? So it's not as bullish because we had price, we opened and we came up. Bulls decided that we were done buying. Sellers stepped into the market. We sold off. And then at the last second, bulls were able to push the prices a little bit higher, but not high enough to make too much of a difference. So that's on our bullish side. Bearish is going to be the same thing, just the opposite. So I'm going to go through these a little bit faster. So our most bearish candle, just straight up selling. No buyers were present, only sellers. Our second one is our second most bearish. Just the complete opposite, our reverse hammer candle here, our red hammer candle, where we came up and sellers said nope and got the price right back down, and that's why we have our long wick. You can think of it too with the hammer candle, because that wick is like Thor's hammer. How you can hold on to Thor's hammer, that's how you can think of a hammer candle.
Can't get it up.
Yep. Next, we have our normal bearish candle. Same story. We brought the price up. Seller said no. We brought the price down. Buyer stepped in and said, we don't like it this low, and brought it back up a little bit, but the bears still won. Then we have our neutral bearish candle. Buyers brought the price up. Sellers sold the price down, and buyers stepped back in and got it up, but not enough to where they won. So bears come out on top for this candle. And then last, our least bearish candle, which sellers tried to sell off. They decided, nope, buyers stepped back in, brought our candle back up, and then we closed a little bit lower than what we opened to make our red candle. So these are different candle patterns that you'll see, single candle patterns. We also have multiple candle patterns where it's more than one pattern to identify. Now, I only use two of these out of all of them, right? And that's the bullish engulfing and the bearish engulfing. So when you see these engulfing candles, this is a sign of reversal, right? So how I read the story is, for the bullish engulfing, we had sellers come into the market and they sold us down. The next day, price opened up below where we started the day prior, and then bulls pushed us all the way up. And you can see that our green candle now completely covers up the last day's candle, which is red. Okay, and this is a sign of reversal. And then the days to follow, we normally see an uptrend. The reverse is true for a bearish engulfing candle. So same thing, our bulls pushed us up, we opened the price up higher, and then we came down lower and we engulfed our green candle with our red candle. And then the next days we normally see continuation to the downside. And then we've got our hammer candle, what they call a pin candle. We still call it a hammer candle. We just call it a bullish hammer candle. And then our doji candle for our indecisiveness in the market.
Like I said, it was going to be easy until Justin started talking. Guys, just a quick review. No, I'm just messing with you, man. But guys, just a quick review. Remember, the big thing to remember for green candles is they close at the top, they open at the bottom. High or red candles open at the top, they close at the bottom. So that being said, how do you find this on TradingView? Well, remember, green candles close at the top, red candles open at the top. So remember I said that. So here we go. We got a green candle right here. Green candles, I'm gonna go back. Green candles close at the top and open at the bottom. So that means this green candle right here, again, closed at the top. So this green candle opened at 37,746.97 cents. It closed at 39,682 cents and 67 or $682.67. How can you figure that out if you don't know that? Now, I'm on May 4th, as you can see down here, 2022. All you got to do, if you don't know the answer to that, all you got to do is put your cursor on your candle and look right here. All of the information you need is right here at the top. So if you can see the numbers at the top, I'm trying to get right on top of it. There we go. The numbers at the top are green. It has an O, an H, an L, a C, all at the top, and then it has the percentage change, right? So open at 37,735.35 cents. The high point, meaning the high wick, the highest amount, just right here, the high point right here, the H, was 40,050.19 cents. The low point, which is this wick down here, right, is right on the L in green where it says, I'm just gonna go up here because it's really hard to kind of keep the cursor. There we go. There we go. So the L says 37,665.46 cents. The close was 39,685. And then and then we already went over the open. And the change in that candle period that day was up 5.18%. That is the easiest way to skip the line. Knowing this information is always great. However, if you want to skip the line, you just want to know what happened in that time frame. TradingView does a really good job highlighting all of this information here for the open, the high point, the low point, and the close. A lot of people won't tell you that, but here at ClearCryptos, we're here to educate you on all the information as well as we can. That being said, guys, thank you for tuning in to another episode of ClearCryptos Education. I hope that candle formations and how they can work for you will be helpful in your trading journey. That being said, my name is T. Hobbs from the Crypto Shop. That guy is Jay Seals, and this is another episode of ClearCryptos, and we'll catch you guys on the next one, man. Peace.